Hey everyone, Brian with Mortgage Atlanta, and today I want to talk to you about the loan estimate. This is a document that you'll get when you start the mortgage process with the mortgage company. Normally you get this after you lock in your interest rate or fill out a loan application. And today I want to go over some of the parts with it and explain what they all mean. So first off, at the very, very top, you'll see the date that you gave it to. You'll see your name and the property address and the sales price. On the right-hand side, you'll see the loan terms. This is a 30-year fix for purchase. It's a fixed rate loan, and you'll see whether it's a conventional, FHA, VA, or other type of loan. You'll see right here whether your loan is locked and when the expiration for your rate lock is. Just below that, you'll see your loan terms in this section right here, and you'll see your loan amount, your interest rate, and your monthly payment. Also, you'll see the word no, 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 all the way down here. That's really important. What this is asking is, can these things change after closing? Can your interest rate change or increase after closing? And the answer is no, or should be no, to all of these things. Down in the next section, you'll have your monthly payments. In this particular scenario, we have principal and interest at $918, and we have PMI for the first 6 years. That's because this is a 10% down loan. After that, you'll see your monthly escrow. That's like your taxes and your insurance. And you'll see your total estimated monthly payment. Over in this section, you'll see a different column where it says years 7 through 30. And you'll notice that the PMI is missing from this column, and that's because on this particular loan, PMI is removed after year 6, and after that, your payment's reduced to $1,329. In the next section, it's very confusing. So I want to go over this very carefully. You'll see here that the number right here, $460, is different than the estimated escrow right here. But you notice it says this is the estimated taxes, insurance, and assessments. And you'll see that the assessment, like this particular property, has an HOA fee of $50. And that's how you can figure that out, because you've got $410 here, $460 here, so the difference is an assessment, like an HOA assessment, of $50. You'll notice that it says HOA in this scenario and that it's not included in the escrow, but the other two, taxes and insurance, are. Now, these two sections right here we'll get to in a second, but we'll get to these numbers from the second page. So on page 2 of the loan estimate, there are a few different sections. On the left-hand side are your loan costs. Now, really, really important. You're going to see some different things from different lenders on this page, and let's go over origination charges. Here you'll see things like points, underwriting fee, processing fee. These are very, very common things in mortgages. Anything in Section A, the mortgage company has control over. So anything in Section A, you can shop for. Now, Section B, services you cannot shop for. In most transactions, you have an appraisal, a credit report, and in this particular scenario, it's a condo, and there's an HOA questionnaire fee. Now, not everyone will have the HOA questionnaire fee, but most people will have an appraisal or a credit report. Some other things that other lenders may charge here are tax service fee, verification of income fee, and other little services that they provide that you cannot shop for. That's in Section B. Section C are your title charges or your law firm fees. Most of the law firm fees are listed in Section C. In this particular scenario, you've got an attorney fee or settlement fee of $11.25, and you've got lender's title insurance of $6.29. Some mortgage companies and some lenders will break out title exam, title search, tax search, and itemize all of these, but in this particular scenario, it's all lumped together. Now, anything that's listed in Section C is something that you really can't shop for. That's going to be something that is going to be the same no matter what mortgage company you pick. Section E, recording fees and taxes. These are the state fees. These are the fees that you pay to the state of Georgia. You've got a recording fee and a transfer tax in this scenario. Prepaids, these are things that you have to pay up front. In this particular scenario, we're closing 14 days before the end of the month, so you'll pay daily interest of $237. for the end of the month, interest till the end of the month, and that's what the prepaid interest line is. And then homeowners insurance, $1,800, you pay 1 year's homeowners insurance up front. Now, again, Section F is going to be the same no matter what mortgage company you pick. Next is Section G. Section G is how you set up your escrows for your closing. Now, people always ask, why are there 7 months of taxes and 3 months worth of insurance, or whatever months are on there, needing to be put into your escrow account? The answer is, it depends on the date of your closing and the due date for your property taxes at the county. In this particular scenario, the closing is set for February, and the county is Cobb County, which have taxes due in October. There are 7 payments between your closing in February and your due date in October, and you have to have 14 months worth of taxes in your account at closing. 14 minus the 7 payments that you're going to make equals 7 payments needed in escrow. Now, Section G is again going to be the same no matter what mortgage company you go with. Section H, these are other fees, and I've listed some here just for you to see. And for example, this particular homeowners association charges a setup fee or initiation fee of $500. And then you've got this other line item called owner's title insurance, and it has the word optional next to it. Now, everyone always asks, why is it listed as optional? And that's because in the state of Georgia, owner's title insurance is not mandatory for you to purchase. It's not something that the mortgage company charges. It's something that the law firm charges. Title insurance, owner's title insurance, protects your interest in the title and protects you against title defects or errors. So if you have questions on what owner's title insurance is, how it affects you, how it protects you, that's something that you want to talk to your closing attorney about. Next, you've got Section J, and what Section J is, it adds up all of the sections on the left, all the sections on the right, and gives you your total closing cost, escrows, and prepaids. And in this particular scenario, the lender is giving you a $500 credit. So if you look right here, you've got $99.42 as D plus I, and D is all of the loan costs, and then I is all of the costs on the right. And then you've got D plus I minus 500 is $9,400 right there. So if you break down the transaction, you've got $9,400 in closing costs, escrows, and prepaids, $25,000 down payment. And in this scenario, the seller's giving a $5,000 seller credit. If the seller's giving you credit, that goes towards your closing costs. So at the end, you need to have about $29,000 in the transaction. And that's page 2 of the loan estimate. Page 3 goes over. So right here, it shows you how much you have to pay in the first 5 years and how much principal you'll have paid off in the first 5 years. You've got your annual percentage rate and your TIP, your total interest percentage. Right here, it says that you may have to order an appraisal. Most loans, unless you're doing an FHA or VA loan, will not be assumable, and that you need homeowners insurance. You have a late payment if you don't make your payment on time, and then you'll see whether the mortgage company sells or services your loan. At the very, very, very end of your loan estimate, you'll see a confirmation of receipt. Now, this is not saying that you agree to the terms. This is not a contract. This is simply saying that you got this document and are signing it on this date. Not that you agree to it, but that you got it. All it is a confirmation of receipt. So that is the breakdown of the 3 pages of the loan estimate.